and rates. Certainly, it seems like it's back towards the foreign currencies, like you mentioned, the British pound and the euro.
But he's run out of bullets with as far as knocking rates down. So they've added money in repos and hundreds of billions of dollars in repos. They increased the balance sheet. These are all things that are supposed to be stimulative. Obviously, he wants to support the stock market. And I think the next issue is the dollar. If they can knock that dollar down a bit, that can be very, very supportive for the markets, and that's one of his goals. Now, looking at the euro currency, the other side of the dollar index, the euro currency is consolidating. It's even getting in a tighter range, even if that, amazingly, if that's now possible. It's trading between 110 and 112 for many months now, and in the last month, it's traded between 110 and 111. So it's consolidating. But let's remember that extreme low in October, that extreme low that we saw in the euro currency, did not coincide with new highs in implied volatility. So that's bullish divergence. And since that time, we've been seeing the euro currency move up. So I think the path of least resistance, I think, is to the upside.
Yeah, it's not just the euro. You mentioned the British pound briefly rallying in reaction to a poll suggesting that Boris Johnson's Conservative parties, talking the Tories, expected to win and secure a majority. I guess my first question in terms of this is, how much can we trust UK polls at this point, Alan?
The Boris bounce, the Boris breakout actually is what it is. So it's shot above. Now 127.5 was the halfway point of the action for the last year, from 135 down to 120. We're significantly above that. We've seen a breakout in the pound. So I have to trust what the markets are telling us, and the markets usually have it right. So I think they're on a path. And you can see now here, a test of the 1-year highs. Everybody was so negative on the pound, and you know how that works. Since that time, we've been seeing it drift higher, and some positive action there. So you're seeing the pound lead the way. Let's see if the euro currency can move above 112 and kind of confirm this move, and that would be what I'm looking for right now.
So a 5-week election process, Alan, it's tough to predict clearly, but what I wonder also is what happens next year when the real negotiations begin. Potential for reemergence of confrontation, I guess, is the concern here.
Yeah, I think that's a long way down the road. We got to take small bites at this apple. I think let's get through the immediate issues, but I think again, it's about price action, and we've seen basing out in a lot of these currencies, and we've seen now a breakout in this British pound. So let's see if it can get some follow through. Yeah. And you're starting to see some stability there. Now, to get into the stability conversation, we have to talk about the macro markets. Now, I know it's December, but this is not last December. We're up 30% from the December lows right now in the S&P, those December depths, even though it feels kind of the same thing where we're on again, off again with the trade talk and reactions to it. It's a very different environment. And volatility right now, even though we had a little mini volatility spike this week, and obviously that's always in the currency conversation because that impacts which currencies are flight to quality plays. The VIX had traded between 12 and 14 for a month, finally had a downside breakout, which was a fake out, came back up, and yesterday I think it got as high as 18. Now we're back down to 15, so we're almost back inside that channel once again. But even at these elevated levels, we're still down 40% in the VIX for the year, and still 60% off of those highs of last December. So again, the environment is much different, and that's very important when you look at the currencies, because that volatility, that overall macro volatility, impacts which currencies people go into.
Alan, let's talk a little bit about the Australian dollar. There's still a lot of focus on not only the Aussie, but also the New Zealand dollar. Right. The Bank of Australia recently left rates unchanged. We had some numbers. We're actually showing them right now. The GDP came in a little bit below expectations, but it looks like on the year over year in line with expectations. What should we expect to see? I mean, again, obviously, New Zealand dollar, the Aussie dollar are tied to trade headlines as well, but ultimately, I mean, we're talking eco data as well as a bit of a concern there as it continues to deteriorate. Well, aside from some of the housing numbers that we've been seeing in Australia, at least.
Well, it's obviously a China issue. So, that's been the overhang on the currency. Now, the Aussie is also trading sideways between 69 and 67 for the last 4 months. Yeah. It's above that halfway point. So I try and make it very simple. It's above 68. If it breaks above that 69, then you can see a nice little rally, 2-point rally up to 71. So you also see bullish divergence there, where when it made new lows, we did not make new highs in implied volatility. So that tells me that the sellers maybe have run out of strength. And also, the Kiwi that you alerted to, the New Zealand dollar, broke out of its range. So the New Zealand dollar is leading the way. So let's see if the Aussie can follow. Very similar to what's happening over in Europe, where the British pound's leading the way. Let's see if the euro currency can follow. So on that hemisphere, you've got the Kiwi leading the way, and let's see if the Aussie can follow, and we can have some bottoms in place in a lot of places around the world.